Hello, everyone. Welcome back to Signal or Noise. This is episode 27. Charlie Bilello here with me, as always, Peter Mallouk. Peter, we have a lot on the docket today, a lot to discuss. We're going to discuss surveys. Have you ever taken a survey?
I'm sure I have. I can't remember the last one, thankfully. How about you?
I mean, I get texts now for them all the time,
Oh, I
usually
would
on
never do
political
that. Yeah.
stuff. But yeah,
Yeah.
never answer it. But we'll go through some of these interesting responses to this survey about the economy and the stock market versus what is actually going on. We're going to talk about the Caitlin Clark of the stock market, and viewers might be able to guess what stock that might be, but we'll run through that. How to solve the housing affordability crisis. So just a small task. You and I, Peter, are going to figure that
We
out.
can do
What's
it.
the best thing to do? There's been a lot of proposals of late to figure out. Obviously, housing's out unaffordable today. What to do about that, if anything? And return of the memes. I can't believe we're talking about this, but we have to briefly touch on the meme stock mania. That was pretty brief. It seemed like last week. We'll see if that's the end of it, but there's a few interesting things surrounding that, and we'll end as we always do with the what you're calling the worst ad of all time, whether that's Signal or Noise for one of the most beloved companies in America. Okay, let's start out with what I'm calling here the great disconnect: surveys versus reality. And I want to paint the picture first for you, Peter, here, and talk about what's actually going on in the economy versus what people are thinking. So here's real GDP. We know U.S. economy expanded 1.6% in the first quarter. So obviously, doesn't appear to be in a recession just yet. Now the expansion is actually 4 years old, 48 months. We've had annualized real GDP over that period of time of 4.6%. Obviously, that's higher than the actual number because you're getting that big bump up from COVID, but nonetheless, still in an expansion. We have unemployment rate below 4%, which is still very historically low, 3.9%. We've actually had 27 consecutive months here of an unemployment rate below 4%. That's the longest streak we've seen since the late 1960s. And the stock market, not doing too bad here. I'm looking at the best performance through 98 trading days for the S&P 500, up 11.6%. That's good for 19th place. And if we look at on a total return basis, well above the average year. So you put all those things together, and if you survey people, how's the economy doing? How's the jobs market doing? How's the stock market doing? You might guess that they would say pretty good. That's not exactly what the responses were. There was a Harris poll, over 2,000 Americans were surveyed, and listen to their responses here. 56% think the US economy is experiencing a recession right now. 49% believe the S&P 500 stock market index is down for the year, even though it's up more than 12%. And 49% believe, this one was kind of crazy to me, believe, because you think if, that this should be reflective somewhat of their personal experience. 49% believe the unemployment rate is at a 50-year high, when actually only a year ago it hit a 50-year low, and it's still below 4% today. What do you make of this? Is this just people thinking things are worse than they are, which we have a natural tendency to do, or is it something else that's causing people to be negative, even though the broad macro data is definitely still positive?
I think it's something else. I think it's two things. I think 90% of it is that all people know is what they experience. Right? If you ask somebody the crime rate, usually they're going to go with what they see in their backyard, what they see online. That's it, right? So I put 90% on what people are personally experiencing, 10% what they see online. So for example, yeah, the economy is expanding. If you consider where the money is going, though, it's disproportionately going to people that have assets. So this big dump of money into the system, you add money to a system, you create inflation. Inflation is not bad if you're an asset owner, if you own real estate, if you own stocks, if you own private companies. Well, good for you. Your net worth just went up because more money was thrown in the system. I had nothing to do with it. You had nothing to do with it. The stockholder had nothing to do with it, and their asset inflates in value. But a big portion of people in the United States, they go to work, they make money, they spend their money, they don't own assets. Well, what are they feeling? They're going to the grocery store and costs have completely rocketed. The cost of their rent has completely rocketed. The cost of their health care has rocketed, not up 5, 10%. We're talking over a couple of years, 30, 60, 80%, right? Those people are getting absolutely crushed in this economy. And so for them, it feels close to a depression. So, yeah, if you survey them, how do you think things look? They're going to assume economically it's all horrible because that's what they're experiencing. This is not a universal expansion. This is not a rising tide raises all boats situation that we're in right now. And I think that's what you see reflected here. Then you throw that in with everything on social media leaning negative. That's how you get these statistics.
So you think it's not just their imagination, they're actually feeling this, and it's mostly because of that inflation picture, and they're saying, even though I still have a job, even though my wages likely have gone up, it feels like a recession to me. So you're not discounting that and saying it's don't listen to what they say. The economy is actually doing great because we have these great GDP numbers
Yeah,
and low
not
unemployment.
even a little bit. I think that the economy is personal, right? Like, I mean, and every now and then you have an expansion that benefits everybody and a contraction that hurts everybody. This is not that time. This is probably going to go down in U.S. history, economics, as one of the most divisive expansions, where one group really benefited and one didn't, and that's 100% because of inflation and how inflation divides the rich and the poor more than they're already divided. I'm not against, like, let me be super clear. The United States system, the capitalist democratic system, has created more wealth, more progress than any civilization in history, and lifted the poverty line much higher than all other countries. In general, it's good, but money printing and dumping money into the system, that does create division between the wealthy and the poor. It's artificially doing it, um, but it's creating real circumstances for people on the other side.
Yeah, and so I guess the stock market is just a reflection of that attitude. If I'm not doing well, then the stock market can't be doing well. I mean, a little bit
Right.
surprising because now more people own stocks than ever before. It's over 60% of Americans now. So you would think they would see their 401k statements, their IRA statements, see, oh, I'm up this year, but perhaps that's again just once again saying it can't be doing well. The unemployment thing just doesn't make sense to me.
Right,
That
right.
like to
That
think
is
that
a
it's
little
at a
strange. Yeah.
50-year high, that just like to me it makes me question the rest of the data. Do really half of the people think that unemployment rate is that high? Wouldn't they be talking to someone that just lost their job? So with all these things you have to throw out a little bit, but I guess what you're saying is don't throw everything out because there's likely some truth to it. And to me, I think you hit the nail on the head with inflation. I think it's a few things else. It's also politically motivated in somewhat in terms of the divide that we see between Democrats and Republicans. This is always the case, right? You always see when a Republican is in office, people that tend to lean Republican are more positive on the economy. When a Democrat is in office, they're more positive. This chart really illustrates the bias here, showing you consumer confidence and the shift that occurred in late 2020, early 2021 when Biden beat Trump. You could see Republicans very quickly were down on the economy, and Democrats became much more happy about the economy in terms of consumer confidence. So this is a factor, but it's definitely not the only factor. If we look at some of the responses here, most Americans here looking at over 50% are saying that we're in a recession. Even Democrats, 49% of them
Mhm.
said we're in a recession. So there is that political element to it, which is a whole nother issue, but it's not just that to explain it. Still, people are obviously feeling something that aren't reflected in the numbers. And what I would say is two things, Peter. Number one, it's that cumulative inflation that we keep talking about. People really, really hate rising prices, and they hate the fact that it's gone on this long. And if we look at this long period of here of benign inflation, I think that really set the stage for a huge negative surprise where people were not expecting this to go on for 3 years with above 3% inflation. And number two would be the group of people that are financing assets. They have credit card debt, they have student loan debt, they have auto debt, they're looking to get a new mortgage. All of these rates are substantially higher, and that's hurting this group of people. Like that's a real cost. Do you think this is impacting things as well? The fact that borrowing costs have gone up so much, and for people who need to access that, that certainly wouldn't get you feeling positive about the economy.
Yeah, I mean, a huge percentage of the population, um, has to pay for car insurance that's a record high. They have to have their health insurance that's a record high. Food has had the highest inflation in decades, and then credit card rates are an all-time high. I mean, like this is all hitting the same segment of the population, and I think that's why you see the negativity because it's real.
Okay, so at creative planning, our clients, if we did this survey of our clients, Peter, though, I think they would definitely get the
They
stock
have a
market
very
one right.
different,
I
very
think
different
probably get.
response.
I think that we get 100. So we education, we believe, is an edge here at creative planning. We make sure you know what you own, why you own it, what's going on in your portfolio, what's going on in the economy, what's a signal, what's a noise, and everything else. So if you're watching this, you're in any of the 50 states. We're in all 50 states. Over $300 billion in assets under management. I'll have a link in the show notes. Click on that for more information or go to creativeplanning.com/Charlie. All right. Number two, Caitlin Clark of the stock market. Did you follow the Caitlin Clark mania, Peter? I got caught up in it. Pretty incredible what she did during that run, the NCAA tournament run there.
Yeah, it was incredible. She got I mean, it's so cool to see the attention, and it kind of sucks to see like the I don't know if you've been following in the WNBA. I mean, she's getting
Yep.
basically hammered by everybody, including her own teammates. So here she is lifting up the whole league, setting attendance records, helping them with their TV contracts, their media deals, lifting going to eventually lift up every single person's salary, and she's met with disdain. It's just human nature is an interesting thing.
What's that saying? Haters are gonna hate. I
Yeah.
think that's one. But so this chart here, you tweeted out. Thought it was pretty eye opening here. The divide between her and everyone else, and maybe that's a source of this is somewhat jealousy here in terms
Yeah.
of look at the points scored there, over 1,200 points and assists, over 325 assists last season. This is comparing her to 9,718 other D1 college hoops players. That number seems very
Yeah.
high because there's a lot of colleges out there
Right.
that have players, but no one's even close in
Yeah.
terms of what Caitlin Clark did. And then if we look at what she did in terms of ratings that you were alluding to there, we've never seen anything like this, even with people like Michael Jordan, Tiger Woods, all people, Venus and Serena Williams, all people that really brought up their sport in terms of ratings. We saw it looks like 379% increase in terms of the WNBA draft, and in terms of people who were watching Caitlin Clark in the semifinal, just enormous increase. You're talking about just a drastic change in the actual numbers here for TV ratings. She's like the Taylor Swift, basically, of women's sports right now, right? It's not an even distribution, as we always talk about the Pareto principle. Well, it's a way more magnified when it comes to sports and when it comes to entertainment. A small group of people can really bring up everything for the sport, and as you said, she should be getting a medal for
Right.
what she's done to this. The fact that we're all watching it and talking about it. Now, what's the parallel to the stock market here? There's only one Caitlin Clark in the stock market. And you and I have touched on this again, but I have to touch on it again because this has blown my mind. I've been wrong about Nvidia continuing to advance. They're happy to be wrong about it because it's helped the market, and we all own Nvidia stock, and now we own more of it because we're investors in the index. But just incredible here, Nvidia up over 20,000% in the last 10 years. You can see no one else is even close. No one else is even above 5,000%. And look at the earnings growth, 50% per year annualized over the last 10 years.
Yeah, absolutely jaw dropping. It's like it reminds me of Tesla. So it felt overvalued for so long, but it went on years, longer than most people expected before it corrected. This is an incredible story. Again, it's wonderful for diversified large cap investors who, by definition, will have Nvidia, and it's lifting up their returns. And that 12% return you were showing earlier, Nvidia is a top contributor to that. And so it's a classic example of own the haystack and you get the needle.
Yeah, 100%. If we look at what I would say the difference between Nvidia and Tesla is just how quick this
Yeah,
has
it's nuts.
transpired here, right? Look at the net income. Only a year ago you're talking about 2 billion in quarterly net income, and now we're approaching 15 billion, and that's expected to continue, and profit margins hit another record high, which is unbelievable. And at the same time, you have all of their customers. You have Apple, Amazon, Microsoft. They're all trying to develop their own chips, but doesn't seem to be fast enough to put a dent in it. And so, what I've been saying about Nvidia over the last few weeks is this is an n equals one type of example. There's no other example now in history that's done this at the scale Nvidia's done. I mean, it's just
Yeah. I mean,
basically unprecedented.
on the forefront, right, of a revolution, the AI revolution. I do think, and this is, I get, basically murdered online every time I say this. There is a difference between a head start and a moat. Apple has a moat. Like, if I told you got to give up your finger or give up your iPhone for forever, you're probably going to give up a finger. You're going to start deciding what finger you're going to give up. That's a moat. People don't want to leave that ecosystem. Nvidia has a head start, but people have to be out of their mind if they think that Apple and Microsoft and Google, all these companies aren't going to start manufacturing their own chips. What NVIDIA has is an incredible head start. I acknowledge it's not a head start that goes away in a couple of quarters, but it's not going to be here in 7 or 8 years, right? The question is, how long is this head start going to last before the profit margin becomes too much everyone else's opportunity?
Yeah, no one's pricing that in right now. It's still trading at 60 times earnings,
Yeah,
30
no
times
one's
sales,
pricing. Yeah,
and it's getting close. And we'll talk about Apple later, not to give anything away, but it's getting close to Apple in terms of market cap. It's not, it's
yeah.
a one good day away from surpassing Apple. It's
Mm,
already now well ahead of Google and Amazon, which to me, you think about 10 years from now, does that make sense? And what a lot of people have compared it to is Cisco, and we've talked about the parallels here, but even the build out with Cisco, it was nothing like this in terms of the increase in a 12-month
yeah,
period in terms of this and the expectations. And probably people were expecting that for Cisco in 1999 as well. The expectation is this is still the early innings. As we know, things can change on a dime if there's a recession, if there's all of a sudden, as you said, the competitors are able to catch up somehow to Nvidia. It doesn't seem likely in the next quarter or two because they're already on their next chip. So whatever they're spending on R&D, now Nvidia's on the new chip and they're
right.
charging supposedly $30,000 per chip. So they have to really, really make a push to get in there. But I guess the point is you're at 15 billion already in net income. Are we going to be talking about another increase like this in the next year? Then it becomes the most profitable company in the world. I'm
Yeah.
not sure that the other big tech companies are just going to sit there and let that happen. All right, so Nvidia becoming a bigger part of your portfolio, Peter. This is kind of stunning. 2 years ago, Nvidia, in terms of SPY, 1.33% weighting. Today, 5.89%. Okay, so this goes to show you, right? If you own everything, you will benefit from that increase in weighting. And maybe next time we'll talk about the big three now here. I think this has got to be a record. Microsoft, Apple, and Nvidia, look at them, 7%, 6%. So
Yeah, I mean, can
getting
can NVIDIA be
very
ahead of
top
Amazon
heavy.
10 years from now? That's tough.
I wouldn't make that bet, but I've been wrong about Nvidia so far, the acceleration. So I thought that growth would have petered out at this point. That at least the expectations. I don't know who the analysts are. If I was an analyst, Peter, I would see whoever the other analyst, the highest one was, and I would go 50% above that, and then I would get that. That would be the game I play. Kind of like Price is Right. If you're the last one
Right.
to go,
Yeah.
just bump it up. How are they every single quarter here so off? I guess it's just the nature of things. It's growing
Mhm.
so fast they can't imagine that'll continue doing that game. Okay, so we'll touch again on Nvidia next quarter, but just an unbelievable story. Never seen this in the history of markets. Number three, no small feat here, Peter. We're going to try to solve the housing affordability crisis in a few minutes.
Oh,
Uh,
perfect.
Up for the task? Good.
Yeah.
Okay. So this is a chart here. U.S. home prices hit another record high. This is the Case-Shiller national data. So not everywhere, but most places, home prices continue to hit new highs. And if we look at the housing affordability index, that remains at record lows. That's a function of two things. Number one, prices, a huge increase that we saw since 2020, printed a lot of money, a lot of stimulus, low interest rates, drove home prices up over 40% in a very short period of time. And then, of course, now you have the double whammy of higher mortgage rates going from 3% to 7%. If we look at 3 years ago, average price of a new home, 427,000 today, 506,000. But you have the mortgage rate at 7% today, at 3% back then. The math does not work for most people. 87% increase in the monthly mortgage payment, and you get looking at a $16,000 increase in the down payment. So clearly, we've been talking about this. I call it kind of the Groundhog Day housing market because it's the same thing every month. Inventory is very low. You got the locked in effect of people not selling their homes because they have these low mortgage rates and they couldn't afford to move because mortgage rates are so much higher today. And you have housing demand down because the new buyers of homes just simply can't afford it based on their current incomes. And yet the prices keep going up because supply is so low. Okay, so here's the solution coming out of the White House. You tell me your thoughts and then I'll give you mine. Mortgage relief credit, they're talking about an annual tax credit for middle class first time home buyers of 5,000 a year for 2 years, and they're even talking about giving an incentive for people who are in their current homes that no longer fit their household, talking about a one-time tax credit of $10,000 to middle class families who sell their starter home. So I guess to try to generate higher inventory. And this one to me was kind of unbelievable. Never seen anything numbers like this in terms of incentives here. The president continues to call on Congress to provide up to $25,000 in down payment assistance to first generation home buyers whose families haven't benefited from the generational wealth building associated with home ownership. And Biden continues to tweet out his proposal here. He said his dad said that the way you build wealth is building wealth equity in your home. I'm not sure if his dad got this what he's proposing here, but he's talking about $400 a month for 2 years when they buy their first home. I'm pretty sure his dad didn't receive that in terms of building equity in his home.
Right.
So you go first, Peter. I have a lot of thoughts simmering in my head about whether this would actually help. What do you think?
This reminds me of student loan, not the debt forgiveness, which is a disaster for a lot of reasons, but this reminds me of all of the grants. And what happened is when the federal government came in and said, "Oh, college education is not affordable, so we're going to give you money, and that'll make it more affordable." Well, what happened was we saw education costs grow at a rate that was second only to healthcare. Why was the inflation rate so high? Because there was more money. People received money. So all the universities raised their rates. I think this is a probably well intentioned, and it doesn't. It's kind of the big economics 101 class that if you give people money to subsidize purchasing something, the cost of that something is going to go up.
You're incentivizing also the universities not to cut costs but to do
Right.
the opposite. I'm sorry, not university. In terms of
Yeah.
the student loan crisis, that's what you're incentivizing there. Here, you're incentivizing sellers of their homes to raise their prices. If you knew that there was going to be this massive gift, essentially, to new home buyers, you're not just going to sit there and keep your prices the same because demand is going to go way up, right?
Right.
So I guess, I guess it's just a question of like, you know, what is the ultimate goal? Is the goal to put a band-aid on it and then like pick a small group of people and say, we're just going to give you money
Right.
and now you'll be able to afford something? It might help that small group of people, but the very next group, right, who doesn't get that, you have the same problem and it's
Right.
probably exacerbated. So I don't think this is any type of long term solution. Also don't agree with the concept of giving people money to, essentially for free, uh, for nothing, right? What is the American dream used to be? You work hard, you save money. Is that naive to think that's still part of the American dream? Today, it's hope for a government handout so you can afford something. I don't think we've learned anything from the years of the US government getting involved in the housing market and what that's actually done, from the Federal Reserve buying mortgage bonds, driving interest rates lower, printing money, remember the first time home buyer credit back. This isn't the first time we tried to do this back in 2009. Fannie Mae, Freddie Mac, obviously their enormous influence on the housing market. All of those things, good in theory, as you said, they're trying to make it more affordable, but they're actually doing the exact opposite because they're not letting the free market take place. They're actually subsidizing that good and driving the cost up. And in terms of the student loan debt, this is kind of crazy because we talked about the Supreme Court ruling, which essentially said that this couldn't be done, but now we have 144 billion. A lot of this is in lawsuits in forgiveness. And has this actually caused the price of tuition to go down? No, you're hearing stories now, Peter, about $100,000 a year that some colleges are going to be charging. So, as you said, the parallels are right there. Education, healthcare, and the housing market, anywhere the government tries to subsidize that good, it seems to drive the cost up well above the rate of inflation.
Yeah. Just rewards the wrong behavior. Instead of focusing on cost cutting, you've got more money chasing your limited supply and you get inflation. It's not as Econ 101.
All right, we'll save that because I want to debate you on whether $100,000 is still, you still believe that's worth it for people, regardless of the major. Do you think that $100,000, because that changes the math a lot from what we were
Yes.
talking about the last time we discussed this? But we'll save that for another signal or noise. I want to move on to return of the memes, and I don't know if you were surprised by this, but it was a little bit surprising that this just kind of came out of nowhere, and we had to decipher what this actually meant. This was the tweet that set it off in terms of this guy Roaring Kitty. That's not his real name, but he was the guy behind the original thing he was posting on Reddit. I think his real name is Keith Gill, but he's posted this meme of a gamer sitting forward in a chair. I'm not a gamer, so I didn't know what that meant. I had to look that up, but it actually means they're getting more serious about the game. Like, this is the
Right.
time to focus. And he tweeted this out, I think, on a Sunday night. And the next day, we saw an absolute media in the very same stocks, Peter. He didn't say buy GameStop. He didn't give his analysis. It was just this single tweet. And the very next day, you have GameStop exploding higher. And then it did it again the next day. It went from about $17 all the way above 60. And then, of course, it came back down. And here we are. We're almost back to where we started. But kind of incredible, the power of that meme and that individual. And if you see the number of people, 27 million people viewed that tweet. Now you have this huge number of people on Reddit. That has only grown. Wall Street Bets is now, I think, around 15 million members of that group. So it doesn't take much with a small stock like GameStop for everyone to pile in.
Yeah, I mean, I think this is just the casino open for business again. I did an interview when I was in New York about this, and I mean, I just got blasted online for saying that you're a sucker if you get back into this. It's just the same thing all over again. I think it's hopefully a meme dead cat bounce. Like, we're not quite having the mania we had the last time, but if you're in it for fun, I understand it's a casino, fine. Otherwise, this is not investing.
Yeah, put $10 in an account and go crazy with it. Now you could buy fractional shares and let that be a lesson. Hopefully, the worst thing that could happen is if it actually works out for you, because you'll think I'm a genius. But
Right,
we
it's
look
like
at the
winning the first time
fundamentals.
you go to the cas I remember the first time
Yes.
my oldest went to a casino and he won. I told my wife this is the worst thing that could happen. Like, I mean, the best case scenario is you want the first time, you go to a casino to lose, to have the feeling, associate bad betting with losing, right?
And you're saying he won?
Well, he won, unfortunately, the first
Yeah.
time, right? And so that's not the outcome you want. That's not the
So he's
outcome
got to
you want.
go back and then learn
Right.
the lesson. If it
That's right.
goes enough that
Yeah, then
he will
eventually
learn
you
that
get the
lesson.
yeah, that's right.
Right. So we're looking here at GameStop revenue, and as you said, a lot of people get crazy and animated when you say anything bad about. I don't know why. I don't have to join in. You guys can trade this all you want, and hopefully you make $1 million. I'd love for that to happen for you. But the fundamental fact is that this is a company still in decline. If we look at revenues here over the last 12 months, they're going down. So there's no reason for its price to sales ratio to have this explosion, other than the fact that it's herd behavior and people chasing,
Right.
and that's not sustainable, right? That will come back down. It took a lot longer than I thought it would following the 2021 thing, but eventually it almost came all the way back down, and then we have this second one. But I suspect the same thing will happen. Now, here's the interesting and funny thing. I know you commented on this, but I noticed this as well. I don't know who's advising RFK in terms of his campaign, but for some reason he felt like this was a good idea to tweet this out, saying that he's aware of the average retail investor has been saying we need greater transparency, stronger regulatory oversight. Not sure that that's what they were talking about, and tougher penalties for market manipulation, which is kind of interesting because you could say this is kind of manipulation on the part of these meme traders. But he's saying his administration will support the ape retail rebellion and enact aggressive Wall Street reforms. And he just invested $24,000 in
Uh-huh.
GameStop. And he's saying, let's punish the predatory short sellers to the moon. We need a free and fair market. I ride with you and I'm not leaving.
I love
And
the
he even
part where
had his team create this meme, Peter.
yeah, unbelievable. I love the part where he puts, and I'm specifically investing $24,000 I won from suing Monsanto for knowingly poisoning
Yes.
soil, as if he like had took those proceeds, that 24, set it in an account just for this. He's it was this is like at the most pandering. That's saying something. Like all three of these candidates are so ridiculous, like in terms of their ability to pander. This is over the top. I mean, I'm sure he doesn't even understand this issue, right? He's not really paying attention to the issue, and somebody on his team just had this idea, and so to watch him to go all in on it is interesting.
Yeah, it's for him to say we need to punish predatory short sale as if
Right.
that's what that was the issue here, that there was predators going after
Yeah.
GameStop. Like those people clearly learned their lesson in terms of shorting a stock with a small float out there, and they lost millions of dollars. But the notion that investing $24,000 and obviously it's a small amount of money for someone like RFK Jr., but he's going to rhyme with you and he's not leaving. We saw the same behavior with a number of people on X a few years ago, kind of encouraging people. And I think that is the
Right.
problem I
That's
have
right.
with it more than anything else. Like you're telling people, yeah, the game is rigged. We need a free and fair market. I can't think of a freer and fairer market than we have right now in terms of the stock market. You compare it to what it was 50 years ago or 100 years ago in terms of a fair market, in terms of the commissions people are paying. Like everything has gotten better for the retail investors. And to say that there's market manipulation, all of this stuff is kind of feeding into exactly what I guess these people are saying. They feel that they were robbed. I don't want to go back into it with the whole Robin Hood thing, but that was actually the best thing that ever happened to most of those people because they weren't allowed to buy more stock at that exact peak. And they
Yeah.
seem to still be complaining about the fact
Right.
they wanted to buy more GameStop on the day that it hit its peak price. And for a number of reasons, and I won't get into it here because it's technical and it's boring, and obviously it's not good for RFK to actually explain the details of what actually happened. It's not a David and Goliath type of thing, but I guess that's the age we're living, as you said. Either they're trying to buy votes or they're trying to influence people and get whatever segment of the market that they think will help them for the election. I'm guessing that might backfire. I don't think that people are thinking he's actually serious about that. And the notion that we don't have a free and fair market today, I think you lose some credibility by saying that. Okay, let's end with signal or noise. And this is a little bit different one, Peter. Here, you tweeted this out saying that this ad from Apple will end up in college advertising study books as one of the worst ads of all time. I'm going to play it here for you and let everyone see what they think about it. All right, Peter, what'd you think of that video of crushing everything? Kind
I
of
mean,
unbelievable. And Tim Cook is tweeting this out, so it's not like he's unaware of this.
it just shows the difference between Steve Jobs and Tim Cook. I mean, there is no way. Steve was so into design and art and the way things look and the messaging. And this was just completely tone deaf, basically crushing all of these things, physically crushing a bunch of things that people are so emotionally attached to, and making it seem like they're all worthless now. And it was just, it was depressing to watch. And you didn't need to be an advertising student of advertising to know that people were not going to feel good watching this.
Yeah, it was kind of unbelievable, and the whole. I think kind of the crazy thing is like the criticism of Apple is like they haven't innovated enough in recent years, and the
Yeah.
whole end of the video they're showing you like it's just we're talking about it being thinner, right? Essentially, which is
Right.
not huge innovations, and of course, the their biggest competitor, Samsung, took advantage of this, putting out their own video of this woman picking up one of the guitars that were crushed,
Oh, I
playing
love
it.
it.
I thought that was pretty smart
I
of
didn't
them.
see
So,
that. That's great.
okay,
Yeah.
I'll send it to you.
I did see, like, the next day, Apple pulled the ad and apologized and all of that, but I had not seen the Samsung ad.
Yeah. So, what do you think in terms of a signal here? Is it that like a company gets so big, they have so much money? I can't imagine what it cost to create this advertisement. I'm
Mm.
sure it wasn't cheap, and they lose some self awareness. Do you think this could be a sign of something for Apple, like in terms of it's just gotten too big, too massive, that
I
it's not
think I
operating on all cylinders here?
I think Apple has such a tremendous moat, and they have a built-in inflation hedge. They have built-in earnings growth that has almost nothing to do with them and their progress now. Every time somebody has an app, they've got to put it in the Apple store, and they're going to pay a piece of that to Apple. There's this whole global economy in the Apple ecosystem. They have got so much room to make mistakes, so much room to fail on occasion. I think none of this matters. Apple is, I've never seen anything like Apple in the history of the stock market. You really have to go out of your way to construct a story with which the strength of Apple ends. I know that not a lot of people feel that way anymore. They think Apple's best days are behind them. And in terms of like innovating and changing the world, yeah, maybe it is. But they don't have to be first anymore. They don't have to be first with AI. They don't have to be first with really anything. They've got everyone in their ecosystem. They can come with stuff later and dominate simply because people are in their ecosystem.
Right, and I guess if you love their products, this type of commercial is not going to change your mind. Might
No,
not incentivize you to
no.
buy the new iPad, but they'll
Yeah.
be okay. But here's a chart that I've been showing on Apple, and it's gone a few years here, just sideways relative to the S&P,
Hmm.
and that's not terrible. S&P's had a great few years, but we'll see if this ends up being another period when we look back on it where Apple's outperformance, and it had massive outperformance, so we can't discount that. Talking about 1,000% return in the last 10 years versus
Right.
200% and change for the market. But I don't really believe this ad is a signal of anything, but it's just something interesting to watch. And you being in the CEO seat, I don't think you would approve something like that for creative planning. Just guessing.
Yeah, no, no one would. I think that they got the backlash, the speed with which people came after that ad was stunning.
So they learned their lesson, cut their losses
Yeah.
quickly.
Yeah.
We'll look
Move
back
on.
to see if this is some type of signal,
Go
but
on to
probably
printing cash. Yeah.
yes, exactly. The buybacks will still be going on.
Mhm.
Okay. We'll end right there. If you're watching this on YouTube, as always, if you like the channel, subscribe, like, leave a comment. I read all of the comments, and we'll see you next time on Signal or Noise. Thanks for watching.